Well, Telkom's share price rocketed after it confirmed that it received an unsolicited offer from a consortium led by former Telkom CEO Sipho Maseko to acquire a controlling stake in the ICT services and telecoms company. Earlier today, the share price was up about 7.3% to about 32 Rand 47. And in property news, commercial property group Vukile Property Fund, which owns malls in South Africa and Spain, said its full-year distribution per share of funds from operations rose 6%. We're now going to be discussing some of the fundamentals behind what we saw in terms of the share price movements of these two particular companies, starting off with Telkom, and we do have a graph for you on screen to have a look at the Telkom announcement. So Telkom releasing a statement on the stock exchange news service confirming that they have been approached by former CEO Sipho Maseko's consortium and the PIC for a stake within Telkom. Remember, over the weekend, we did get news reports coming out that the consortium had approached Telkom back in March, bidding about 46 Rand per share. And at the time, according to reports, Telkom rejected the offer, saying that it was not in the best interests of its shareholders. However, they've come out saying that, well, we do confirm that these talks are actually happening and we haven't really rejected the offer. We just require a little bit more information when it comes to the consortium and also the levels of funding. Telkom also saying in its announcement earlier today that the discussions at this particular point are exploratory as well as non-consensual in nature, advising shareholders to exercise caution when trading their shares. So just a little bit of a background here. When you look at that share price, so we did see a dip a little bit earlier on in terms of the share price performance, but that was back when the trading update was released, where Telkom indicated that due to its shift when it comes to the digital strategy, they are expecting to incur about 1 billion Rand when it comes to its retrenchment costs. They may have to reduce its staff percentage by about 15%, but then also reporting that high number when it comes to impairments, sitting at around 13 billion Rand across its business portfolios. The other key thing that Telkom seems to be dealing with is the high debt levels, which has resulted in that depressed share price. However, some analysts that I've spoken to saying that the share price, rather the depressed share price movement, could be an offer, even an indication for other players to come in and perhaps even try to bid for Telkom, saying that we might see some increased corporate activity with MTN possibly coming back to the table. We are expecting Telkom results in the next week, so we will be speaking to the CEO about the company's performance, as well as to some kind of indication in terms of what would tick the boxes for the board. Moving on, in other company news, we're going to be looking at Vukile Property Fund, and we've got two charts. The 3-month chart, and in a few seconds, you're going to see that go into a 5-year chart. So Vukile Property Fund reporting their interim numbers today, showing a increase in a distributable income of about 6%. They've also increased their dividend, and they are expecting it to increase even further in the next financial year. So they have a very interesting property mix. The majority of their property portfolio is in Spain, with about 60% and just below 40% having exposure to South Africa. They play in a very interesting space, which is the rural and township side of the retail portfolio, where they are seeing some resilience on that particular front. And it comes a little bit counterintuitive, because you would think in an environment like this of high interest rates and high inflation, you would start to see a little bit of pressure being put onto the consumer. However, what's quite interesting is that over the 5-year period, as you can see on that screen, Vukile Property Fund has basically changed their tenant portfolio, now focusing on more non-discretionary side of the tenants. They are seeing some risks when it comes to, at least for the next 6 months, and one of those risks have to do with utility supply, water being another another issue, never mind load shedding. When it comes to the idea of load shedding, a little bit of pressure, but they have put in some risk mitigation measures, but they indicate in their results presentation that water supply is the next risk. The other one has to do with tenant arrears, particularly in the gym segment. But the metrics, when you look at the South African portfolio as well as the Spanish portfolio, looking pretty resilient at this particular point. However, they are going to be focusing on consolidating some of the operations and possibly focusing on that township portfolio. They did have some major acquisitions, at least over the past few months. So I had that conversation with the CEO of Vukile Property Fund, that is Lawrence Rapp. But having a look at broader markets in terms of how we are performing so far, we did see a little bit of resilience coming through from the Asian side of things, that resilient flowing through a bit more on the European side of the bourse performance. The South Africa side of things, when it comes to markets, the JSE, there was a bit of pullback in terms of what we saw, and that was primarily because of the resources. However, the biggest news that everyone's going to be focusing on for the rest of the week is the US CPI data, which is due tomorrow. And on Wednesday, we have the Federal Reserve interest rate decision. Market analysts are expecting a skip. We're not sure whether a skip and a pause might necessarily be the same thing. However, at this point, there is a 71% chance that we might see a skip going into this particular interest rate decision. However, seeing the surprise interest rate announcements that we saw from the Bank of Canada as well as the Bank of Australia, all eyes are on that CPI print for tomorrow, with some analysts expecting a pullback.